Hi, this is Kerry Artak with Wicked Stocks, bringing you your weekly update in the Mag 7. I did record this video on Monday. Actually, I recorded it on Sunday, November 16th, for the week of Monday, November 17th. I'm going to start with Microsoft, jump right into it. All weekly bar charts, every single one of them. And these are really just updates on longer-term line studies. This is broad brushstroke analysis. I don't really get into any 3 to 5 day swing trades here. This is just sort of big picture stuff. And, I've been saying this for months, that Microsoft has this kind of wide band of long-term resistance that spans about 5 years of activity. You've got this inside channel that has actually, despite all the spikes, on a week-by-week basis, we continue closing below this structure. So this is still a sellable resistance, 543.89. And even if we close above it, it only indicates a retest of this channel top that we actually did test back in July, this extreme channel at 570.78. So holding below this area does allow longer-term bearish rotation for Microsoft. This incredible rally that we saw from April into July, that momentum, I don't expect that to reemerge. But if we did close above 570.78, that would be a more protracted rally as we continue into 26. Probably something in the realm of from January 23 up to July of 24. This 1 year process would likely continue over time, but there's no point in going there because this is your ceiling, and below which, having tested it, this market is susceptible to longer term bearish rotation. I'm going to jump to the next chart here, and bear with me. And so our down pivot, after all of this, after testing this resistance area, is 490.91. This is a very classic, mostly horizontal channel bottom that, if settled below, does indicate a good high. I'm going to say well into 26, because unless this is a 3 to 5 week collapse, and we've seen that kind of volatility recently, but I think this is more of a 2 to 3 month collapse, or a 2 to 3 month bearish continuation into roughly the 428.50 region, kind of a full channel extension. There's also a 5/8 Fibonacci down in this vicinity from the April low to that July high. And there are other things we'll map out as well, but I think you can anticipate the upper 420s within 2 to 3 months of closing below 490.91. Until then, 3 to 5 week, 2 to 3 month swing traders or near-term investors can bottom pick the low 490s, take profits in the mid 540s, and all the way into the low 570s. We could trade inside of roughly this area for months to come. Closing below 490.91 is the short play into the upper 420s within 2 to 3 months. Let's move on to Amazon. Amazon has been testing a couple of weeks ago this meaningful channel top at 253.96. This was kind of a tough play because we opened above it that week and then broke back below it. But this is a settlement-based approach. If we were to close above 253.96, I would expect within 1 to 3 weeks 270.62, which is a longer-term structure that does go back to the 23 low of January. And so 270.62 is your primary resistance, able to contain buying, well into 26. We could fall away from here into later 26. You could also call this one big wide range between the low 250s and the low 270s. That is our significant overhead resistance for Amazon. We've tested one of these. This market is susceptible to falling back. But the question is, how far south? I think right now we actually do have kind of a near-term sell signal. Last week's settlement below the low of the high that was placed the previous week of 238.49 does set up this meaningful channel support in the 210.48 to 218.56 region. So if there is a play right now in Amazon, it is being short in the upper 230s or lower, anticipating the 210s. The low to upper 210s. This band of channel support does span back to that April low and can absorb selling, through the first quarter into Q2. We can round back up again, round back up into, once again, the low 250s to low 270s within a matter of 2 to 3, 3 to 5 months or so. And that is, and of course, if we were to close below 210.48, we have a channel bottom down here in the 170s that would be expected, but there's no point in going that far out because we'll be providing this to you on a week-by-week basis. Meta put out a sell signal a few weeks ago when it closed below this descending channel bottom after having tested the descending channel top a week earlier. We kind of pegged this pretty well as a sellable resistance area. I didn't expect then subsequent settlement below the channel bottom, but that is what did occur. 655.80 is your near-term resistance. Sellable resistance through the rest of the year, and below which over the next 3 to 5 weeks by the end of the year we can actually test this channel support at 543.65, and this goes back to the February high. This is like a 1-year structure, can contain selling through the second quarter, and from here we can round up again. Once we test this lower support, we'll be able to take a fresh look at the structure that may be playing out. There may be descending channel tops and speed lines and such that will give us an early indication as to upward rotation through the first quarter. But for right now, selling 655.80 and buying 543.65. If we do close below 543.65 in the coming weeks, then we have a 2 to 3 month sell signal, a secondary sell signal down to this 426.52 longer term support. And that is a channel that spans about 3 years. 3 years plus. This goes back to about 3 years. 426.52 is a big area, able to contain selling through all of 26, and from here we can round up again. So, near-term weak down to 543.65, a mid-term support, 543.65, able to contain selling through the first quarter, maybe even beyond. And if we close below 43.65, 426.52 within 2 to 3 months. If we can close back above 655.80, that is actually, that neutralizes expectations for 543.65. Let's take a look at what we would have then. 655.80 is that descending channel bottom I just showed. If we close above it, then we've got a 2 to 3, 3 to 5 week rally to this descending channel top. So we've got like 3 to 5 week swing trade here in Meta, selling the mid 650s, buying the mid 540s. That is the play right now. And then to the upside, if we close above the mid 650s, we have like a 2 to 3, 3 to 5 week play into the 720, 723.75, descending channel top, able to contain buying on a monthly basis, and we could fall away again from here perhaps. And it would be finally a settlement above 723.75 that would reignite, I think, a rally similar to what we saw from the April low, into the summer highs. And this is probably a 2 to 3 month play at this point. Over time, though, as this continues to descend, and let's say we close above it late December, which could be the case perhaps, then we've got more of a 3 to 5 month play into the 860s and climbing, over the next few months into the 910s, et cetera, et cetera, et cetera. So it would be a settlement above 723.75 that would tell me that we've got a meaningful rally that will play out on a multi-month basis. Until then, we've just got these 3 to 5 week plays. I'll go back to this chart and just mention that you could bottom pick this channel bottom, anticipating then upward rotation into the, the 850s, 870s, et cetera. But I'll leave it at that. Google. Alphabet, symbol GOOGL. So Alphabet, we closed above this channel top at 226.45 back in September. And, we've been moving up. We almost reached the objective, the full channel extension, equal distance of the previous channel at 297.23 over the last few weeks. Last week, we put out a new all-time high. We almost put out a key reversal low. Had we closed below the previous week's low of 275.19, we would have. But as it turns out, we closed at 276.41. So it kind of neutralized what could have been what that is called in candlestick, the bearish engulfing pattern. I call it a key reversal high. In any event, we do have a newly formed rising channel bottom at 267.88, which is just under the low from last week of 270.70. So, this is a bottom picking zone that above which we should reach 297.23 over the next 1 to 3 weeks, depending on volatility. But if we close this week in Alphabet below 267.88, that would be a double sell signal, also below last week's low, which was the move high. And so I would then anticipate within 2 to 3 months a return to this 226.45 channel top. This is solid support into 26. It can contain selling into the second quarter. We can round up again from here. And I think that's all I've got to say about Alphabet. Apple, I provide our wickedstocks.com subscribers on a week-by-week basis. We really get into it. It's about a 10-minute video. I give all the 3 to 5 day, 2 to 3 week, 3 to 5 week, et cetera, et cetera. This is just purely broad brushstroke. In fact, I don't really want to get into much of anything because I really don't want to give away too much that people actually pay for at wickedstocks.com. But nonetheless, we've got 280.84. We rallied to within 1% of this a few weeks ago. This is a significant 5-year channel top. Can again contain buying pressures as it did last December through the first quarter, and we could fall away from here into later 26. This is the ceiling for Apple, in my opinion. If we can close above 280.84 by a 1% margin, just add 2.8 to this number, and that'll give you your 1%. Then we're in a longer-term sustained rally that should play out through 26, ultimately anticipating this full channel extension that is presently in the 380s. There will be other swing counts and trend lines, et cetera, et cetera, et cetera, on the way up, but this is the big picture. Now, if we close this week below 264.65, that is the low of the high. That is an aggressive down pivot. And, you know, I could map out a target, and in fact, I'm doing it as we speak. There is a channel bottom here that is presently 236.16. That would be the objective. This could be within 3 to 5 weeks. This could take the better part of 2 months, but this would be the target. And we could bottom out here well into the first quarter, round up into the 280s. But if we were to close below this structure in the coming months, that indicates a good high. I think this high will be untested until perhaps later 26. But in the interim, we would fall into the low 200s. Let's move on to NVIDIA. We provide this free every single day on our YouTube channel, so you can just check all of this out. But nonetheless, mid 180s, 185.65, solid support right now, able to contain selling through the rest of the year, and above which we should push into these wave counts. I don't have them mapped out, but you can see this in our YouTube, our daily NVIDIA report. 219.64 to 228.94 remain in reach over the next couple of months above 185.65, where we could top out through the first quarter. If we close below 185.65 this week, I see this could be a 1 to 3 week sell-off to 157.71. And this, I think, is our primary support as we move through the first quarter. We could bottom out here through Q1, round up into this 219, 228 region within 3 to 5 months or less of testing 157.71. Finally, it would be a settlement below 157.71 that would then indicate 118.81, and this is kind of the granddaddy of our trend support for NVIDIA. If we were to close below this level any point in 26, you can kiss NVIDIA goodbye, I think, as a realistic kind of in this perpetual uptrend. This is the uptrend long-term for NVIDIA, a 118.81. If we close below 157.71, expect 118.81. If we close below 185.65, expect 157.71. But until then, I'm not expecting any of these unless we close below the other. Holding above 185.65, anticipate this 219, 228 region over the next couple of months. Tesla, same thing. We cover it every single day on our YouTube channel for free, so you can see this. And you might have actually already bowed out of the video by now, but I do go into Palantir in just a second, so if you want to stick around for another minute. We did test channel support last week, 388.57 and climbing. Holding above this does actually maintain upward momentum from this April low, believe it or not, and does maintain our overall objective at 527.87. I'm going to call this a 2 to 3 month objective. With present volatility, that's realistic. Into the first quarter, we can reach into the 520s. So this still in play, the 520s. This channel top is converging with the 520s anyway over the next few weeks. So buying 388.57, I'm talking to near-term investors, holding out over the next few months for 527.87. If we close below 388.57, no longer expecting 527.87, and rather, I would expect the 5/8 downside Fibonacci. This could be pretty quick. This could be within 3 to 5 weeks with present volatility. 313.50, there's also a rising 2/3 speed line in the same vicinity. So this would be our objective. I'm taking it very stair-step. If this gets violated, I can actually draw out what I would anticipate. It would be this structure right here. If we take out the 5/8, then we're looking for the low 200s. Yes, believe it or not. But this is, you can see these waves are all realistic. So it's not pie in the sky. If we close below 388.57, 313.50 likely within a matter of weeks, where we could bottom out through Q1 perhaps. If we take out 313.50 within 2 to 3 months with present volatility, the low 200s. But anyway, that is that. Let's go on to Palantir. We're going to hit 15 minutes in this video, which I don't like, but Palantir has a solid base of support. Two channel structures, 161.32 and 149.56. They rise and converge in January in the mid 170s. This is an area and if you're long Palantir, I think don't sweat the sell-off out unless we close below 149.56. If we close below 149.56, I don't even have an objective mapped out, actually. I probably should have included that. This high comes to mind, 125.41, as a quick target. This would be within a matter of 1 to 3 weeks with the recent volatility. I think more so. I think this thing just sort of lets much of it go. In fact, I could look, for instance, and I don't have this mapped out entirely, but we'd have a kind of a full channel extension roughly. I'm eyeballing this. The equal distance of this channel would likely be met, and that would take us in the 80s, 90s, and the low 100s over the next few months. But I'm just kind of going through the downside scenario. This is bottom picking territory for those of you interested in buying Palantir, because we can round out from here to new highs within a matter of 2 months or so of testing the upper 140s, low 150s, or low 160s. I think that pretty much rounds it out. I am going to leave it at that. I'll be back next week with another update in the Mag 7. You have a great week.